Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So, a little temperamental day. We came in today. Futures are down like 2 or 3 after yesterday's strength. I know a lot of people were pointing to the volume yesterday that it was pretty anemic, even though some things traded to highs. But if you're trading intraday, it doesn't matter if you buy it at pivots and sell it when it goes up and you manage your position. So today, a lot of guys probably came in with multiple positions, and then today, if you are pretty tight or pretty active, I would think you definitely reduced. Why did you reduce? Let me show you a few reasons why, just in case. You look here at the chart of the S&P cash. I like to go over the process that I do have, and at this point, if the market was going to be super strong, my humble opinion, we should have held 24.41. Okay, that was the gap up from yesterday, or probably even held 24.43, and if we were super strong, 24.46. So by closing below this low and not holding that doesn't mean it's the end of the world. No, but it means that today's action had a little bit more downside power than yesterday. So does that also mean maybe we test the 21-day again? Perhaps. But whenever we close on lows, to me, I lighten up. What I'd like to see maybe open up down a little bit. You know the drill here. This is today's low, 24.36. So maybe you open up down, you reverse up, and you stay in the same range. But at least you get some price discovery, just in case. If you're a swing trader, okay, or just, which I'm a swing trader also, but I definitely at times are a little bit more active. And lately I've had one foot in the door, one foot out the door. This doesn't really mean much to you. You might be in from testing the 21-day, or you might say, hey, I'm not touching, my positions unless we break and close below the 21-day moving average, which we haven't done or we've been above since here. So it all depends on how you play and how active you are. If you sold today and we open lower, yes, you saved yourself some downside. But if we open up and do nothing and you sold it lower and you have to buy it higher, then it's frustrating. That's happened many times also. So, we shall see. I came in long the IWM and I'm not long it overnight. Why am I not long the IWM overnight? Because today, what did the IWMs do? It actually, let's show it a little bit different here. Closed below yesterday's low and also closed below the 8-day. So I like to be long the IWM when it takes out the 8 and 21-day, comes back, tests it. Next day you get some price discovery, and then you get a little pivot, and you could trade amongst it. For now, we're developing another wedge type pattern here, but today's action looks a little bit more, there's a little bit more downward pressure for the day. We're still above the 21-day. Who knows? Maybe tomorrow would be nice to get a move lower that reclaims it, and we could buy it back a little cheaper. If it happens to open up tomorrow, okay, you know what? I'll be frustrated, but who cares? It's my process. It saves me a lot of money. But if for some reason, market is telegraphing something, and it wants to resolve this to the downside with a big gap down, I won't be in there. So I don't really have a fear of missing out right here. That's that FOMO. Okay, then you go to tech. Tech actually acted a little bit better, but again, it closed on lows, and tech still has a lot to prove, in my humble opinion. Why does it have a lot to prove? Last time you had this accelerated trend break to the downside, you had a little red dog reversal here, and within 3 sessions, it took back the entire down move. Here it's different from higher, broke the 8-day moving average, got, a little support here by the 50-day, but now, instead of 3 sessions later engulfing it, we're building a lower range. And for today, we close in the lows. So what does we do? Usually you close up, you try and take things long, you close in the lows, you try and be a little less risk off. But if you're trading versus a 50-day, today doesn't really matter to you. If you're trading for active cash flow and you're a little risk averse because of this type of trend, and you're worried about a bear flag coming in here for a break that way, which could happen also, then maybe you're a little lighter. So for tomorrow, we'll figure out, what happens with 139.31. Again, the best thing for overnight guys, because some people might have even went out short, little down open, okay, and then maybe reverses up, reclaims the slow, and then all of a sudden you're building this lower range still for a move to the upside if that's what you're playing for, or not. If you're a trader and it starts going downside, then maybe there's a nice, clean, awesome trade for all of you bears that are looking to, trade this to the downside, which just hasn't happened yet. So we shall see. Another thing that kind of got me a little bit more neutral is the banks. I've been trying to play the banks. I was in the, came in long Bank of America today, and I leave flatted. Why do I leave flatted? Because again, for me, it's not the end of the world. Okay, let's just call it that. You still have this nice descending trend line that was broken. But today, look at the size of today's bar. Today's bar had a lot more power than the prior day, and it closed below a prior low. So for me, that gets me out. If it was an inside day down 20 cents, I'd be in it, and I'd be waiting to see if we could add to it above this. By this type of day, failing a resistance or not ready yet gets me a little bit just more cautious that sometimes momentum and closing on the lows leads to more downside, and we'll see how it reacts here. If that's the case, if the banks open up lower, maybe it's buyable. If they open up, I guess you could have just sat there and waited and said, I'm not going to touch it until it gets out of the 21 day. But again, that's your process. As far as high beta tech, definitely lots of two-way type action. Amazon has my number the past few sessions. Have been adding on strength, looking like it's going to get through 1,002, and it keeps failing. Does it mean, Amazon's not going up anymore? But it just means that it's a little sloppier to me, where I don't know. I keep seeing the seller come in there right around this 103,003 area. So I'm not long it overnight. Bunch of red candles here. Here's your 8 and 21 day. It still looks fine, I guess, but it could come here and test it. Why not? I don't know, just kind of sloppy, and I'm more in wait and see mode there. Google still not above this area here. Like if you look at Google going sideways, the sellers are still trying to protect that candle. Yes, what do I mean by two-way action? I mean, some guys bought versus the 50-day for this red dog reversal and maybe got out into resistance or did it again. And then today you had a small red dog reversal around 979 where it went above it, traded below it. So if you were long from here, maybe you sold it. If you're thinking you could short at a resistance and it closed in the lows and it was short overnight, that's a trade also. It all depends which way you want to, which side of the coin you want to be on. For me, I'm just avoiding it for now, and we'll see how it reacts. If it creates a lower channel here below this wide range bar for potentially a break to the downside, which a lot of people are calling for this summer. But there's still a lot more trading that has to happen before the clarity there. As far as Apple, it tried to be stronger today. I came in long. Unfortunately, I'm not long overnight. For some reason, I always hate to miss out on an Apple move, but just it's below the 50-day still. It hasn't even tried to penetrate into this big candle after, having this pennant break to the downside. Yesterday, I did get long, okay, and it was a nice trade. Today, I think I sold a little bit pre-market above 147, but then definitely lost trying to buy a dip. And when it closes on the lows, for me, I'd rather just not have it, and we'll see. Maybe it opens down a little bit tomorrow and we could buy it and have a little price discovery. And then if it reclaims today's low of 144.94, okay, you could buy it. And then all of a sudden, now it's hanging in the middle end of this channel versus the upper end. And then we could see a move above this to test that, but that's a bunch of days ahead. But for now, negative candle, didn't get to the lows, took back half, which isn't the end of the world of yesterday. But for me, again, when you close in the lows, I don't buy into that. First down day, I usually just don't do it. I just wait, just in case, especially considering technically it's below the 8. It's below actually it's back below the 8 day, below the 50, below the 21 day. I like to be a lot more comfortable when it clears the 8 and 21 day, when it clears resistance and holds it, when you get a nice bullish type flag and it extends. So when you're on this side of that, I'm just a little bit more skeptical just in case. Call me skeptical dog. Anyway, Nvidia also opened up and they sold the strength a little bit, not the end of the world, but here was yesterday the trade where you could have been a buyer through 154.50 to negate some of this candle, and then if you had it overnight, little topping tail. Some guys are talking about a high and a lower high. So at this point, I don't know if you could be shorted, but if this was in Nvidia, I'd say, hey, why not short it versus today's high? And maybe some guys are, but if you were long it from last week or long it even just from yesterday and you sold it today, now you wait and see how does it handle the 8 day. Does it continue to follow that up? AMD, some guys are asking me to go over it. It's above all the moving averages. They announced a certain chip for data centers after the close. One of the things I have long, just in case it wants to play a little catch up. Not a big trade, but if it does break this, maybe there is some upside. Baba, I switched. I've been in Baba, the stock, almost all year, depending on the day, depending on the size. But since tonight there's news as a binary event, Red Dot doesn't take risk into a binary event, so I switched from being long Baba to buying the 140 calls just in case they get included. And then Jack Ma's bullish tomorrow. Maybe we get a big move up, which that I'm kind of a little FOMO for. But if not, you know what, and it goes down $5, I'll just risk the options that I played for Friday, which I'm fine with. So if you look here at at BABA, here is it held the gap, still looks fine. If there was no binary event tonight, maybe I would still be in some versus the gap or just less. But if for some reason they get included and these stocks gap up tomorrow, for some, et cetera, I do think it can trade back towards the highs here. And if that's the case, if you have the 140s, it could be $5, and I think I paid 130, and that's a decent strategy. As far as updating you on my GWPH calls, I did sell. I'm down less than half. This stock, we had a thesis on to start the year. I was in some calls. Just right in here, and we had a nice trade up to resistance where it failed. So we made good money on half. The other half went worthless. So down here, when it broke, we're like, let's just accumulate some calls just in case, and did so. And the calls we bought around 5, I think I sold some by around $10 today. So it was a good trade. And now it's a free trade just in case they do come out with data. My options are for July and November, so I'm going to stay in some, but couldn't help just take some off considering the size of the move that this just had here with the bios. The bios, just in conclusion, gave you a really nice breakout. I got to hand it to some of you guys in the VTF. I was trying to be long in here, and I actually was pricing out the options. I didn't go with it just because I didn't really love tech, and I just didn't, need to be. I didn't feel like being bothered, I guess. And then on Friday, you had your red dog reversal here. You had your day one breakout above this little trend line. You got paid today. Listen, if you bought strength up here, you know what? Today was a tricky day, but if you bought with the red dog reversal when it broke above this little pennant, you probably sold some strength, and now you have the ability to rebuy some back if it hangs out here before going again, and we'll see how it handles this 299.80 tomorrow. Hopefully it holds above it. Ultimately, this pattern has been building for quite some time, and it does feel like it's real. What do I mean by it's real? I mean that hasn't broken above this and really stayed above it in quite some time. It does look as if it wanted to. Why couldn't it get to 320 or more if the market stays okay? That's where that fills that gap, and then there's even another gap all the way up here. So we'll see if that's the case. If that's the case and it's going to happen, I would think that it does not get much below here if the market comes in. It is extended from the 8th and the 21 days, so that's why today you probably shouldn't have been just buying every dip. But after a little price discovery, perhaps, again, if you bought here or bought there and sold some strength, then you have the luxury of buying in this area for what could be better action this summer if the action wants to stay with the bios. So in conclusion, not the end of the world today, but for me, some things are in a little bit of no man's land. What I mean by that, strong stocks are very extended from the 8 and 21 days. So if they're down today, I don't feel like just jumping in. I'm going to wait. Some sectors traded below yesterday's lows and closed below yesterday's lows. So that means sellers had a bit more power. So I don't buy day 1 down. I love buying day 3 or 4 down with the red dog reversal, but that doesn't happen that often either. So, you have to be a little quicker. And, we'll see what happens here. We still have a week or two left in the end of the quarter. It does feel like the fix is in. Low volume yesterday, drew out the skepticism. So, if you were a little bit risk off because of that into today, then maybe you saved yourself a little bit of, brain power. But with all that said, things are still setting up. You just really, it's a lot more of a market of stocks versus a stock market right now, and your entries and exits do matter because lately adding on strength, especially in high beta tech, has not worked, or shorting in the hole hasn't really worked. So you have to pick and choose your spots a little bit more carefully and maybe just have a little less positions. With all that said, have a great night, and I'll see you in the morning.